Hi, this is Zak Mir with the Bulletin Board Heroes here at Vox Markets for Wednesday, the 24th of August. And the bearish divergence seen last week has kicked in for the FTSE, so we failed at that higher April resistance line, just shy of 7,600. And that sort of double, triple failure there, the bullish divergence came in to take us down close to the 200-day moving average. That's currently around 73.80. So as long as we're above that on an end of day close, so that the glass is still half full rather than half empty. The reason for still having a slight long bias is the way that we have both the 50 and 200-day moving averages both currently rising. That would imply that we're heading into a golden cross over the next few weeks, and the run up to a golden cross normally a bullish period for a stock or market. So let's see if that actually works. Ideally today we're above 74.60 on the close, so we're above that resistance line, the low resistance line there from April, but a little bit messy at the moment, but the RSI did actually kick in, I suppose, to warn us. Moving on to Bitcoin, which has recently had a bit of a snap to the downside. If you get the right chart here, we can find out that basically we've been in a falling trend channel since back in November. Top of the channel there about 27,000, but we haven't been able to get near that yet. The best is around 25, just below the old May support, around 25,500. Looking more closely at the situation, you can see that actually the big down day that we had just last week hasn't really been beaten on the downside, so the support there just below 21,000. 21,000 breaks, then we're looking at 19,000, which is early July support, but this market's still, I suppose, being helped by the way that the 50-day moving average is still rising, and while it continues to rise, that is limiting the downside for this market, but obviously pretty disappointing that we're still anywhere near 20,000. Moving on to the stocks, which may be a happier picture for some. Here we've got Aminex, where the recent bounce off the floor of that broadening triangle from this time last year continues. We've been looking for as high as 1.5 pence, maybe by the end of next month, and looking for that while the shares remain above the initial August resistance around 0.97. So around the 1p area, looking for 1.5 on Aminex. Stock which probably won't win any prizes for liquidity is Drumz. Drumz. In fact, here we had the trend line break and the 200-day moving average break back in April, but it's taken months for the shares to finally kick off in a decent way. Here we're looking for that resistance line projection from back in April 2020 as high as 1.4 pence, while we remain above the 0.5 pence area. Obviously it's not a very liquid situation, so very difficult to make precise calls here, but that upside there, 1.4, 1.5, looks as though it does make sense. On to Egdon, which is also shaping up quite nicely, sort of V-shaped bull flag here. Initial target here was around 6 pence, which we hit to the top of that rising trend channel from September last year. Through 6 pence, looking for 8 pence, which is a steeper trend line projection from December last year, and maybe we could see 8 pence by the end of next month, while we hold above the 4.5 pence area, which is that uptrend line from the autumn of last year. Moving on to Imperium, which obviously pulled the rug from beneath investors back in April, even though there was supposed to be a very good chance of success. Here we've got a broadening triangle, which its resistance line, they're heading for 1.75, which seems rather a long way away, but at least while we're above the 50-day moving average at 1.25 pence, 1.75 looks to be on the cards, maybe as soon as the end of next month. Another obscure situation coming up with GYG. Here we've had new lower lows for the second part of August, and looking for a bear trap, and also looking at bullish divergence there in the RSI window. So just a slight hint here that the shares are ready to turn around, and if they do, then we're looking for the 50-day moving average somewhere around the 30 pence area by the end of next month. Obviously, we don't want to see any fresh lows there ahead of a recovery. and we are looking at an end-of-day close back above 20.5 pence, the initial August support there as the first sort of technical buy signal over and above the bullish divergence, which you can see in the RSI window. GS Technologies looking rather better and sprightly today. Here we've got a situation where we broke the resistance line there from back in November, the beginning of the month. It's taken a few weeks to finally get going. But we do have not only that falling bullish divergence line, but they actually have an uptrend line here in the RSI window. So that does suggest there's some momentum behind the current move, and that we could head up to the 200-day moving average, currently around 1.6 pence over the next 2 to 4 weeks. We're helped along by the bear trap gap reversal, so we've gapped up today through the 50-day moving average. So that gives us more hope that the 1.6 pence area will be hit sooner rather than later. Good to see Gfinity still making positive noises of various kinds. Here we've got this recovery, or we had this recovery of the 50-day moving average earlier this month, and current situation is that we're looking to see the rising 50-day moving average gapped up today as well, so unfilled gap to the upside. That does suggest it's even more likely that we'll see a target here around the 2.2 pence area of the 200-day moving average over the next 4 to 6 weeks, especially while we hold above the 50-day line, which is down there at around the 0.9 pence level. Moving along to Red Rock Resources, which has made a bit of a comeback, which maybe is surprising some, but looks rather more chirpy than it has for a long time. We've got a golden cross just coming into play there as well. We've got 50 and 200-day moving averages rising together, and we should have a cross over the next, by tomorrow. That also brings in to focus the top of that broadening triangle there from this time last year at 0.75. So 0.75 looks pretty nailed on while we're above the upper 50s. If you're looking for greater glory, then maybe the old resistance on the way down from May around the 0.95 pence level could be the next target over the next 1 to 2 months. But looking like quite a big turnaround there for Red Rock at the moment. Finishing off with Tower Resources, which I covered a few days ago, but it's still trying to fill that gap above the neckline resistance there around 0.22. We're looking for the gap to be filled up to the 0.3 area over the next couple of weeks. Big picture target here, while we remain above 0.2 up to 0.4. Maybe that's for some time in October if everything goes well. It just looks like this is a bit of an exhaustion gap to the downside, and the shares will recover. That's it from me today. More updates tomorrow.